whole idea of how can we go create the future, not hope for a better one and wait for someone else to create it. And I think that mentality in itself is an important component of what you can do.
Hello, everybody. This is NanaTalks. I'm your host, Irena Hotlip, and today the Dr. John Sebesta, the Koch and Endowed Chair of Entrepreneurship, joined me. Thank you so much.
My pleasure to be here. Thanks for having me.
We met, I believe, half a year ago or something like that, and we've talked about the research you made on the basis of your university, and please correct me here if I got something wrong. You were trying to figure out the systematic challenges which minority-owned businesses are facing, especially when we are talking about access to funding.
Correct. Yep. We were approached by a community organization, Kate Bailey with Tara, who recognized that most of the people that she works with, who are either women entrepreneurs or minority entrepreneurs, we're all getting stuck in this access to growth funding, especially that's moving from the very first kind of seed capital, which usually people are investing themselves, but then how do you get the capital to grow and scale your business? And everybody was kind of stuck there. And she said she consistently saw the problem, but couldn't find any research as to what was causing it, what was behind it, and thus reached out to us. And we were certainly very interested and decided to dive in and try to unpack the problem.
Right. And for how long are you working on that research?
I've been working on it off and on for about 18 months so far.
Okay. And can you please share, I don't know if that's like available information or not, and if you already kind of gathered some statistics or created some hypothesis around what is going on, what are the reasons behind that not necessarily equal sharing of the access to funds.
Yeah, absolutely. And so when we started, we started looking at the data and the secondary data, the stuff that's publicly available, and saw that new businesses, high growth startups are responsible for at least half of the new jobs. About 40% of startups are founded by women. Yet in 2021, women-founded startups received only 3% of venture capital. By 22, that had dropped to 1.9%. And Black startups received only 0.5% of venture capital. And so we said, okay, what's going on here? And originally the thought was, how can we get more of this angel and venture capital funding going to women and minority businesses? And so what we did in these kinds of early studies where you're just exploratory, we started with qualitative research, which is generally interviews. And so we pulled together a cohort of entrepreneurs that were all either women or minority founded, and interviewed all of them, and then got them all together for focus groups to explore commonalities in their challenges, their journeys. And then we also pulled together a variety of different roundtable events with funders, from impact lenders to traditional banks to angel capital or angel investors and venture capitalists, to try and understand the challenge from everyone's perspective. And what we saw in that process at a very high level is there were three core challenges that were driving the issues. One being the entrepreneurs that we were speaking to, they weren't naturally embedded in these ecosystems, in the funding networks. And so they were looking at it kind of from the outside. And because they didn't grow up in those networks, they didn't have an intuitive understanding of them. And thus there was information overload. So much information about banks and about VCs that they didn't know where to go. They didn't know where to start, and really if their business was a good fit for any of them. And so that was probably the biggest challenge of people are just wasting a lot of time going out and knocking on any and every door, just being told no without any kind of redirection to where could they be a better fit.
Right.
And then the second major challenge was that a lot of these entrepreneurs were thinking about their business in a fundamentally different way than the investors and then the funding structures tend to reward. And so when we're thinking about equity funding specifically, typically our investors are looking for high risk, high reward. I need each company that I invest in to be able to return a sufficient amount to effect what we call fund the fund. They have to provide, that's where you hear the 10x or 100x kind of returns. And you need to have a clear strategy to get there of how are you going to have that exit event that enables that investor to get repaid. And most of the entrepreneurs are focused on how can I solve core problems in my community with, I want to have a scalable business, but that whole strategy around how do I get to that exit, who is the potential acquirer, they're not thinking about because they haven't even launched a product. Why would I be thinking about who's going to buy my company? And so just the way that they think about business is inherently different, and they're not telling the story that the investors expect to hear to enable to receive funding. So they're just talking past each other even when they have really good businesses. And then part of what results from that is the third challenge, that the investment structures that we have today are well suited for that extremely high risk, extremely high growth, or for an asset heavy, low growth, traditional business that can be funded by a bank where you have the collateral. And a lot of the businesses that the entrepreneurs we spoke with are starting fall into this challenging middle where you have scalable products, but you still have inventory costs, you still have production costs. So they're still somewhat capital intensive, but don't have the same scalability as a software or biotech firm. And so the businesses that they're creating don't mesh well with any of the traditional funding structures. And we see kind of a gap in the actual investment offerings that are available to this group of entrepreneurs especially, but even more broadly.
Yeah, absolutely. I was wondering, like, listening to all the three reasons you figured out, whether you mentioned that this is systematic problem, and I'm wondering if that's all these problems are applicable only for minority-owned businesses or economically disadvantaged groups, or you can see that all these problems are basically applicable for all other groups of the folks who are trying to get into entrepreneurship.
Absolutely. And one of the comments that we heard repeatedly is it feels like a private club that I can't break into. And I think that you're right. That's applicable across the spectrum of any kind of disadvantaged entrepreneur or entrepreneur who hasn't, again, grown up in or been connected in these social networks. The general theory around entrepreneurial ecosystems suggests that we have resources, including financial resources, skilled workers, and entrepreneurial knowledge being some of the core. And then it's the efficiency with which those resources flow through social networks that determines how effective your ecosystem is. And I think that what we're seeing is that those resources aren't flowing effectively through the ecosystem and through those networks because so many of our entrepreneurs are sidelined from those conversations. And so again, they don't know how to break in. They form networks that are oftentimes somewhat insular. And so we have women entrepreneurs getting together and forming groups, and that's great. And we need that because we need that camaraderie and that support system. At the same point, we also need to have a connection into the current funding ecosystem. And so this concept of, or what we've been talking about, is both bridging and buffering. Of we need you're kind of buffering where you're meeting with other people that are like you and you feel safe and that's good and you're supported. But we need networks that also bridge into the current mainstream financial system. It'd be ideal to create one where they don't have to get into the financial system that exists today, but we know that that's not very realistic. And so how do we make progress forward? We need this idea of bridging into the networks and people that can specifically make those connections.
Right, that all makes sense. And I'm wondering, because I know that when we were talking about a lot of conventional type of businesses, I mean, almost nothing connected to tech world or biotech or anything like that, they do have those hubs connected to the SBA and SCORE, where they can find mentorship and etc. And I'm wondering, I don't know if you had a chance to talk about that with the folks you had the interviews, but if you can see that at least these systems, I mean, SBA loans, SBA mentorship programs, or SCORE programs, are somehow bridging those gaps.
So we've definitely talked about that, and there is some incredible work being done by the SBDC and SCORE and a lot of those groups. I think that the challenge that the entrepreneurs that we spoke with were having a couple of different facets. One, trying to find who to go to within that system. Again, they don't know whose door to knock on and who's actually going to answer and give them some sort of help. So that was one part of, they don't know if they should be going to SBA loans or if they should go to venture capitalists. And so there's not enough information at the outset to guide them through this funding journey. And the SBDC certainly, again, can play a great role in helping with that once you've gotten in and you've gotten connected to someone. The other challenge, and this wasn't specifically as the small business development centers, but a lot of these mentoring groups in general, is the quality varies so dramatically. You may get paired with a mentor. Whether or not that mentor is helpful is subject to debate. And so the free resources are not always, sometimes you get what you pay for, and they're just not high quality enough. And then I guess the third challenge that we heard a lot with those types of programs is the value of the investments is just too low to make a meaningful difference. Now, SBA loans, those certainly can be larger, but a lot of the grant funding or any of that kind of impact capital was at such a low dollar value compared to the amount of work that it took to prepare the applications that it just didn't make sense. People were spending, dozens of hours or more preparing a grant application that was going to be maybe a $10,000 grant, and they had a 1 in 1,000 shot at getting it. And it's just like, it doesn't make sense. The calculus doesn't make sense as a good use of their time.
Yeah, absolutely. I tend to agree here with you, because I do see a lot of grants available out there where the amount of grant you can secure going to be as big as $5,000, and you're going to need to prepare and to provide business plan and P&L analysis and everything, and it's going to take you a while, to say at least, to prepare all of that. But I tend to believe that, on the other hand, it might be very good to think about all these questions if you haven't ever done business planning, or if you haven't ever do the P&L analysis or dashboards, or work, with all this, sometimes maybe thinking as boring spreadsheets. But if you want to build your company, the financial side of a business will be inevitably one of the most important sides, because, well, we cannot build the successful venture without enough funding, no matter whether it's going to be friends and family, bootstrapping, or external side of the funding.
Absolutely. And the financials and really developing that robust plan, we know that the plan is going to change. The plan is going to be wrong. At the same point, going through the work of laying out that plan and really understanding your financial models is absolutely fundamental. I think what we heard is that the format for grant A is totally different than the format for grant B. It's totally different and so going through the exercise is absolutely valuable, but then going through the effort to restructure everything that I've already built for a different $5,000 grant, that's where it became very frustrating and not value add.
Yeah, it doesn't sound that it makes a lot of sense just to keep spending your time where the ROI is so little. Yes, exactly. I'm here with you. You mentioned at the very beginning that you've seen the trend that the numbers keep declining when we're talking about the access to the venture capital, for example, for women-owned companies. Have you figured out what might be the reasons behind of that? Again, systematic reasons, not from the side of the entrepreneurs. Because from my perspective, I am basically right woman and I own the company. So what I can see is that a lot of, at least my bubble, technical related bubble, there are tons of articles discovering this process, discovering this problem, and basically trying to share the idea that investing in the female-led company isn't a charity, and you cannot assume that this is the act of a charity. It is a strategic decision, and this is business. It's not emotional. It cannot be, this type of decisions cannot be made based on race or gender or whatever other reasons except of the business related reasons, and yet we can still see declining in numbers.
Yeah, and so those were certainly the numbers for 2021 and 22. I don't have the 2023 numbers, so I don't know if that trend has continued. Given everything that was going on in the market at the time, there was a general, people were becoming more conservative in their investing. Less funds were available, and so they're going to fewer and fewer deals. And this is speculation, not data backed. But when we are more conservative, we tend to stick with things that we know well. We'd stay closer to our comfort zones. And so historically speaking, that has looked like generally white male founded startups. And so I don't think that there's any intentional effort to move in that direction. And that was one of the things we certainly saw with all of the funders. And we wanted to make sure we included and had that conversation as well. Of most of the funders that we spoke to, at least, recognize this challenge and are trying to correct it and see the opportunity to invest and the better returns, quite frankly, that have arisen, especially from women-founded startups. At the same point, they control a relatively small amount of dollars, at least that are being directed that way. We've seen in the broader ecosystem some of the backlash against specifically funds that were specifically targeted at some of those demographics. And like you mentioned, whether or not the funds should be directly targeted is a broader question, a broader challenge. And so I think that this general tendency to just revert back to your comfort zone, especially when there was some political backlash against targeted funds, may be part of what was driving those numbers to reduce.
Yeah, that sounds like about right. I was wondering, because again, getting back to my personal experience as a female founder, I always wonder, especially when you're applying for some kind of a investment or something like that, you're going through this typical process when you need to fulfill some kind of a questionnaire, your pitch deck at the very end of it, and in a majority cases, and I'm talking about 90+% of all the applications I've ever fulfilled, even though I was applying for the fintech related investments, not female led or whatever, because I'm operating in a fintech. Right. You're going to be asked about your race, about your gender, about your disabilities, whether you're a veteran or not. Veterans and disabilities are not that common topics, but your gender and your race will be on that questionnaire. And I always was wondering, why are you asking about that? I mean, if you are planning to make the decision solely based on my numbers, on my pitch deck, on business side of the deal, why do you need to know about my gender and my race and my ethnicity or whatever? On the other hand, I'm assuming that that's the way how these funds are trying to bridge that gap. And I'm wondering what's your opinion on that? Or maybe you do have some kind of the part of research discovering that problem.
So it's an interesting question, and it all becomes, where does that information ever become relevant in the investment decision? And if so, where and how? Those stats that I mentioned at the beginning, we wouldn't have those stats if they didn't ask those questions. And so on one hand, we need the data to be able to illuminate the problem. And so I don't think that the gathering of data is inherently a problem. It's how does that then manifest in the actual investment decision? And what data has shown, again, not from our project, but for broader research, is that it is in specifically like the questions that women founders are asked have a much more negative valence than the questions that male founders are asked. And so male founders are asked about the upside potential, and women are asked about the downside risk. And so, again, I don't think that those are intentional decisions or efforts that investors are making, but it is a systematic bias in our society that so then I think that if we can start capturing actually more data in terms of, okay, let's track the gender, the race, all of those components of the people that are applying, and then if we can add on what are the questions that we are asking, can we make that more standard, can we put in some additional structure to protect ourselves from the bias that we may not even realize that we have. So I don't know if that fully answers your question, but
Yes, absolutely. And I'm wondering, like, when we are fighting against something or trying to eliminate, right, as you mentioned, and I totally agree here with you that gather the data to study it, to make the researches, that is very important. But I'm interested in why are we trying to figure out these biases and eliminate them? Because there is a lot of, again, feeling that it's mostly about, I don't know, like equalizing everything, charity related. And from my understanding, and I've done some researches because I was really interested in that topic,
yeah,
it's not about charity, that's about economic prosperity.
absolutely.
So, can you please just double down a little bit on this topic, why and how we have to try to figure out those biases and fight with them?
Yeah, no, I think it's a really important point that this isn't about charity, and this is, from my perspective, there's a couple of components. So, one, I have a perspective of business. A business is here to serve society. It is not here to generate profits. Profits are a means, not an end, and that uh, as a result of the current systemic structure, our society is missing out on a vast array of products and services because the people generating those ideas don't fit into mainstream funding concepts. And so we are solving problems for oftentimes the same populations as our founders. So we have Black founders that are solving problems, Black women founders that are solving problems that Black women have, that the people sitting across the table that are making the investment decision don't understand. And so again, there's a challenge of I don't understand this market, and so I'm not going to invest in it. Again, I'm going to revert back to what's in my comfort zone, and as opposed to trying to grow my comfort zone and understand a new market. And what that results in, and this is to your point of the economic side of this, is it's an economic failure. The whole idea of efficient markets is that money should flow to where there's the best opportunity, but that assumes we all have perfect information and perfect access. And our investors, who tend to look a certain way, don't have perfect information into the opportunities that the entrepreneurs are raising and presenting. And so because they don't understand it as well, they're more risk averse, they're less likely to make those bets. And so there's a significant economic loss from not investing in those businesses. And thus there's a societal problem as well of we're not creating those products that are going to serve and better humanity in various ways. And we're not creating the economic wealth consistently within certain populations. And so we continue to perpetuate generational poverty cycles where some rounds of investment could start to break those cycles.
Yeah, and I also always thought about, again, getting back to the three major reasons you've discovered, but that I'm not embedded because none of my family or friends have ever started their venture, no matter how big or small that might be. So I have no one to go to and ask, how
Yep.
did you make it that happen? And I assume that this whole idea, I do remember, when I first heard about, or like my first memories about the United States. And for me, the tiny girl from post-Soviet Union, that was the dreamland where everybody can start the business, something absolutely impossible in Soviet Union.
Right.
And imagine how frustrated I was when I discovered, well, not everybody, not everybody dreaming about that, because not everybody feels that this is something feasible. And from my understanding, this so-called American dream, that was the reason why at some point of a time, the United States was able to create that incredibly strong economy. Because, and again, this is nothing more than just my feeling and theories as a small post-Soviet Union girl, right, who saw this amazing economy. And for me, that was the sign of power, because everybody, no matter how big, small, where from you were, could build something from the scratch.
Mm-hmm. And that's
And
what this
yep.
that's what this country and this economy was based on, absolutely, and on the work ethic and the ingenuity of millions of different immigrants, primarily or entirely. Um, and so I absolutely agree with you. And then, especially in our more modern society, it's and I would say even back in those days, it becomes rooted in your network. Like you said, when everyone was an immigrant, everyone knew someone who was starting businesses, and you had an ecosystem of people that were trying to go through this together. Um, and today, I think those ecosystems are more fragmented, and we don't tend to see as much entrepreneurship from people who have been here for generations. And so once those cycles are embedded, they're harder to break free from. And like you mentioned, small girl from post-Soviet, the you didn't grow up understanding how these systems operate and how to navigate them, and having a social network that enables you to do so. And so now it has become more challenging to fit into a ecosystem that is already developed. In those early days of country formation, the ecosystem wasn't developed, right? It was still being formed continuously, and now, while it's consistently evolving, it's a much more robust structure with consistent networks and social norms and everything else that then becomes harder to break into.
Yeah, that also makes sense. But again, within the last 3 years, we are seeing just this boom of small businesses, right? 33, almost 34 millions of new small businesses has been opened in the United States. And I do not have the specific numbers, how many of these businesses were minority owned or female led, but I assume that it's still going to be a significant number.
Absolutely.
So we can see that some changes are happening out there, hopefully. But I'm wondering, and it seems to me that the incentive might be not in the necessarily the best place. I mean, the government incentive, because the current government incentive is to help you open the business, but not
Right.
to survive through the second, fifth year. And according, again, that's just statistics, right?
Mm-hmm.
To say at least not everybody gonna make it through the first year,
Definitely. Yeah.
even smaller amounts through the second year. So I was wondering if you have also maybe made some researches or discovering connected to these topics, what might help small business owners, especially minority owned, to pass through these challenging years, the first, the second, the fifth, because, okay, you break into this club. So
Mm-hmm.
now what?
Yeah, and that's exactly why we tried to focus on this growth funding phase as opposed to the initial funding phase, because to your point, there are a lot of government programs, and they're really good programs that are designed to help you launch at that very initial inception. A lot of those SBDC resources are designed to help you open the business, where there's much less at the how do you grow it, how do you scale it, how do you really find product market fit. And so that's really where we're still in this research and trying to look at the second phase of, we think that there's a few things where a few changes or improvements that can be explored. One is and we're talking with the local government to try and support something in this range, or this facet of how can we better connect entrepreneurs and investors and mitigate the time wasted for the vast majority of entrepreneurs who don't inherently know how to navigate this system. So how can we provide a tool that enables them to put in some basic information about their business, like you said, going through some of those, the P&Ls and some base information about your business, but then categorize and orient you to, you should be talking to this type of bank, may not even be all banks. You should be looking at angel investors, or maybe VCs are viable, but you're probably 2 years from the point where that's the case. So help prevent the extensive time waste for the different founders, and then couple that with appropriate resources to fill in the gaps that they need to be ready for those investments, because maybe bank financing is right for you, but there's aspects of your business that aren't robust enough yet to go get that bank. So how can we connect you with the right partners, the right community resources, to shore up those aspects of your business? So that's
and also M&As, I assume, right? Because I keep getting that idea, and I really understand the root cause for this idea that if you're planning to do the exit, you need to understand or start to build your exit strategy basically from the day one to figure out who might be the good partners, what they are looking for, what you can propose them, to make sure that the exit price will be as much favorable as you'd like to see it.
Mm-hmm. Yeah, no, you're absolutely right. And that's, I think, there's an education component that's certainly missing of, if you're going to start this type of business, these are the things you need to be thinking about, like your exit strategy. Now, I think the bigger challenge, and this is a much lengthier process, the matchmaking is relatively simple. As hard as it is, it's simple in comparison. We need more investment structures that don't require you to exit your company. Right now, that's the de facto model if you can't get bank funding, which many, many businesses cannot do. And so there has to be an alternative between, I have very slow growth and I have to have figured out how to fund my business for 2 to 3 years of solid P&Ls before a bank will lend to me, and I'm going to grow at 10x and exit. There's a wide array of businesses that don't fit either of those models, and right now they're not being adequately supported by the current structures. So figuring out those investment offerings, I think, is the really big opportunity.
So are you talking about some kind of a government, local government related investment programs or something like that?
So what we've talked with the local government about is more on the matching side, less on the investment side. I think that there is an opportunity for governments and for nonprofits. Like you said, this isn't charity. At the same time, sometimes we need someone to come in and de-risk the investment, provide some first loss capital, maybe a whole lot more effective to be the first $5,000 or $10,000 invested and be the one that's willing to take the risk, to then be catalytic capital, where you're then enabling that starter or that founder to go get bank funding or to go get some sort of other equity investment. So I think startups and governments can play an important role in unlocking access to other types of capital, as opposed to thinking about their investments in a silo. But yes, then it would be other types of investment structures. Revenue-based financing is an interesting model that can get funding into the hands of founders without requiring them to eventually exit their firms.
Yeah, that sounds really great. And I don't know if you're already kind of working out or already have created some kind of a programs or something like that, which will allow us to basically lower or de-risk those investments. How these things are looking currently?
So it's always hard to start those projects because you need the capital to be in to create the programs in the first place. And so where I would say we're at some very early stages of exploring primarily what are the innovative projects and structures that are in place. And so I've had conversations with some really interesting investors out of Boise, Idaho, for example, There's an interesting study going on right now up at Oxford that I've gotten connected to some people that are involved in that, of just exploring how should we be structuring these investments. And so that is very much at the early stage. Kauffman Foundation has done some great work in exploring that as well, from recoverable grants and a bunch of different things. So what we're trying to think about is what are the different profiles and personas of entrepreneurs as well as the businesses, and then how can we map those personas to different funding structures that better meet their needs and still provide a good, healthy return to investors. Because again, profit is a means to an end, but providing a healthy return to investors is an important component of a capitalistic and economic society. So we think that those returns are important. This isn't charity. This is good business. And we need to get more business into these entrepreneurs' hands, but potentially with a different structure.
Yeah, absolutely. And I was wondering, while we were talking about the female-led and minority-owned businesses, whether you also included veterans to your research, because at least numbers I was able to find out is say that 45% out of veterans are most likely to be self-employed comparing to non-veterans. And I tend to believe that it might be connected to the fact that most veterans basically they're going to the army being super young, and when they're going out, when they're trying to do that transition to civilian life, they do not have that experience of being part of conventional and classical enterprise or company-ish related life, and therefore they are forced, or they feeling so that they are forced to open their own ventures to make it happen, to survive, to provide to their families. And I was wondering like how everything is looking like for the veteran-owned businesses.
So we didn't specifically include veteran-owned businesses in our research. I would say that, to your point, they face some of the same challenges in not having access to the social networks. But we didn't specifically look at veteran businesses. I think that's one of the things you're alluding to is it gets into the type of business that's being started. And so if I've developed this set of skills and I'm going to go create a business that's using those skills, that is what's often termed owning a job. Am I creating a business or am I owning a job? And if I'm just owning a job, that's not something that can typically attract growth funding. So with our scoping being this, you're really trying to grow a business. We're specifically not looking at the businesses that intend to stay single to a few person entities.
Right, I got it. And I was wondering about again, there is that specific term, minority-owned businesses, but it is super broad term, right? Everybody is included, everybody in this category. And but there are basically a lot of types of other economically disadvantaged groups, like, for example, military spouses, right? We very briefly talked about that right before the recording. And I was wondering if you can see any trends or something like that of basically expanding that understanding of who or which groups are belonging to this minority-owned businesses understanding or bigger group.
Yeah, so I mean that gets into another specific challenge where with a minority spouse, you are oftentimes being picked up and moved on a fairly frequent basis. And one of the natures of entrepreneurial ecosystems, and we believe that the ecosystem has a really important role in fostering the connections, developing the talent, that if you're moving frequently, you're moving between ecosystems, that ecosystems fundamentally have a geographic location. And despite the fact that our world is more interconnected than ever, that geographic presence really matters. And so I think that it's a different type of disadvantage, but an important one nonetheless. So then for those types of founders, it becomes how do you get into some sort of ecosystem that can permeate or extend among all of those different moves. And again, it goes also back to what type of business are we starting? Is it owning a job, or is it truly creating a structure, creating an entity that can grow and scale? So I think that military spouses are at a disadvantage in a few different ways. But our research definitely didn't look at that directly.
Got it. Thank you so much. You've a couple times already mentioned this idea of owning a job or have that opportunity to scale. Can you please just go a little bit deeper in the details? What are the differences, and how can startup founders or even company owners figure out whether I'm just building so-called lifestyle business or is that venture-backed type of business?
Yeah. So this goes back to Robert Kiyosaki, Rich Dad, Poor Dad, good book from a long, long time ago. Um, and it's an excellent book that I would definitely recommend in how wealthy people, how rich people, as he defines, think about money and think about business differently. Um, and the idea of, if you're owning a job, the business, the entity, only makes money when you're working. And so if I'm a plumber, and the business is only going to make money when I'm out working on someone's house, or commercial job. Um, Whereas if I'm building a system that I'm then connecting all of the various components, and once that system is operating, that system continues to run whether or not I'm specifically engaged in it on a day-to-day basis. Now, typically you're still going to work on leading that business for some time, but it's this idea that it can operate in a lot of ways independent from you as the founder. And so that's when we think about, are you owning a job, or are you creating a system or creating a business? The business has the ability to grow and scale without you and your specific knowledge and expertise. Are you specifically doing the work? And so that's where many of the trades, many of the kind of consulting type of businesses are more so owning a job, and less we're truly building a system that can grow and scale.
Yeah, absolutely. And do you have some kind of a dependency when we're talking about jobs or ventures which are being opened and operating by minorities, whether they are most tend to own a job or create a business?
I don't know that it's that different from anyone else. I think that there's a big mix, and so I think that people are doing the full spectrum, from starting typical own a job type of services to creating the scalable products and services, which was a lot of the entrepreneurs that we talked to creating tech businesses that have the infinite scale that venture is looking to invest in. So I think that we see minorities and women founders launching the full spectrum of them. I would say there's, from what we've seen, and again, I don't have enough data to claim this statistically, that we see a lot of concentration in that middle of, in the scalable products, the scalable services that need outside capital. If I'm growing a consulting business, I don't need any capital because I just need to work more. But if I'm trying to scale production, I need some outside capital, but it's very difficult to attract that because it doesn't have that infinite exponential that venture's looking for. And so I think that we see a lot more women and minorities in that middle section, but not recognizing the distinction between the scalable products and services and the tech-based businesses that are going to attract venture capital. So they're knocking on those doors where the people are then saying, how do you get to 100x return? And there's no possible way to do so with the business models that they've created. So again, going back to, we're missing funding structures that really support them, and especially during COVID, we saw more and more. We saw a lot of women leaving the workforce and starting their own enterprises for enhanced flexibility and to do things they were more passionate about. And a lot of those fell into that scalable service type of structure. How do you go attract the funding to grow those? remains the challenge.
Right. And just to wrap up, what are you envisioning for the future trends, taking into account all the current movement and we do emphasize, and that's absolutely amazing, all the importance of the diversity and equality and inclusivity in everything what we are doing, but we are still far away from the perfect world.
That's for sure.
But I mean, you do have much more data than I do, so I'm wondering what are your like hopes and aspirations for the future?
Yeah, so I think that there's we talked about a few of them, but there's three main areas that I'm excited and where I think that we have a good opportunity to make progress. One, I think that people are starting to see the economic loss from the current system, and so we're moving away from this as a charity case and an impact oriented motivation for people to invest in women led and minority led startups. We're seeing that they're leaving money on the table and their investors are performing, or their investments are performing worse than they could be. And so I think that is motivating people to start changing, start thinking about their investments differently and recognizing their own limitations in that. I think that we are also, with the rise of some of the technological solutions, we have better opportunity to do this matchmaking type of work, and increase the efficiency with which the entrepreneurs can navigate these social networks, and turn them in as virtually hot leads or warm leads, and creating a pipeline of good deal flow for investors. And so it's creating value for investors and helping them to see opportunities that they wouldn't otherwise, which, as any investor will tell you, that's part of their goal, is to find the opportunities before someone else. And so as they start to, again, see the economic activity and we have the technological tools to do so, I think that we'll start having some wins, and that will get a lot more people engaged. And then the conversation is growing about this, and more people are recognizing it and starting to explore ways to test alternative structures. And so the fact that there's a conversation happening at Oxford about how can we fund differently, how can we create different structures, I think is really powerful. And then the flip side of that conversation that's happening as well is we need more women and minorities in the investor chairs that will have a different understanding of these businesses and the business models and the markets. And so there's more and more programming looking at that. And I know here at Daniels, at DU, we're trying to think about both sides of that equation as well, because it's better for our society. It's the equitable thing to do to try and break down these systemic barriers, and it's good business. And so these things aren't in conflict with one another.
Yeah, absolutely. And if I may, to ask, because you mentioned two sides, right? To discover the better way to fund and the better understanding of the markets, and by putting more minority-owned or minority-related folks and female into VC chairs. My question would be, how can we, as the founders and entrepreneurs who are not funding, who are not in the VC chair, but still bring more light into the opportunities we are discovering? Is there any way, in your opinion, we can show more, I don't know, clearly how big markets are we are operating in and why they are so important, and they will lead to huge profits? Because we can sit tight and wait until this change will happen, or we can act a little bit more proactively and not solely asking questions and waiting for the help. I'm a huge fan of the speech of JFK, ask not what country can do for you. Mm-hmm. So I'm asking what I can do for the system as being the part of the system.
No, I think it's a really important question. And what you're getting at is the whole idea of how can we go create the future, not hope for a better one and wait for someone else to create it. And I think that that mentality in itself is an important component of what you can do. I think that recognizing, and this is maybe a little bit less true for you and for your specific business, but recognizing that the people you're talking to may not have the same understanding, or likely don't have the same understanding of your market. And whether that's right or wrong or fair or not, you may have to invest a little bit more time to educate them on that market and help to show why it's a compelling investment opportunity. Things that are intuitive to you are not going to be to them. The other thing that I would suggest, like I mentioned, in terms of the networking, by all means, network with people that, with other women entrepreneurs and people who share the same mentality and motives and values, and find people that share those values that can then transcend into the existing funding structures. That we have to find people who can be those allies, who can be those bridges in order to start changing the system. And then the last thing, once you are successful, because that's going to happen, don't go sit on a beach. Go get back into it, like start being an investor. Show
Right.
back up.
Buffering and bridging.
You have to come back into that chair, even when that's now another uphill battle. And so I think that the women who are successful, the minorities who are successful, being willing to then continue to put in that effort to come back and start shaping the ecosystem from a different perspective.
Yeah, that sounds about right. Well, thank you so much for joining me today. That was incredible. And I really hope that a lot of folks will be able to find a lot of inspirational ideas in this conversation. That was Dr. John Sebesta. Thank you so much.